Welcome to Toy Business Unboxed, your gateway to the secrets of the toy industry. Here, Jason Shea, a toy entrepreneur and expert in the field.
Every product we develop is really inspired by some of the real life experience that we have with our son.
60% of all toys last year were sold on Amazon, which is incredible.
Be passionate about it because it's a road, it's a journey.
Like when you have an idea that you think is like gonna somewhat like change the world, make things better, I'd say go for it.
We'll guide you through the enchanting world of toy design, marketing, and manufacturing. Now let the unboxing begin.
Hello, welcome to another episode of Toy Business Unboxed. I'm your host, Jason Shea. Today, we have a very special guest, Tyler, the founder of Seller Accountant and the leader of Seller Roundtable Mastermind Group. Tyler has, over the year, helped multiple e-commerce sellers maximize their businesses, totaling over $100 million in annual sales. In today's episode, Tyler and I is going to be focusing on talking about some very exciting topic, macroeconomic and finance. This is a topic that some business owners avoid to talk about and because they don't like to talk about numbers as much. But we'll be talking about the impact of the interest rate and also how is it changing the customer behavior. Also, we'll be talking about cash flow, profitabilities, and also building lasting relationship with the customer. So thank you so much for joining us on the podcast today.
Absolutely, Jason. Thanks for having me, buddy. Good to be here.
I guess I want to start out first. Can you share with our listener, how do you become the seller accountant, or what make you do what you do right now?
How do you become the seller accountant? I think it's probably what went wrong in your life. You ended up with the seller accountant. But no, so I did study accounting. I actually studied more finance in grad school, built a healthcare company in 2012 and I sold it in 2017. And so I think probably more of an entrepreneur and a builder than I am an accountant. Just happen to have that degree. It's kind of like a AA or whatever, like once an accountant, always an accountant. You can't shake it. But yeah, we started this business to try to help other entrepreneurs not make some of the mistakes I made in my first business. So I'm not proud of this, Jason, but I owned a company with 100 employees and I almost crashed it financially a couple of times. And that just shouldn't happen as an accountant with a banking background. And I just thought, geez, other entrepreneurs out there probably have even more issues than I do, hence seller accountant.
I don't know if I mentioned this before the interview. I also had an accounting background. I used to work in corporate finance for over 10 years, but my specialty is cost accounting, which is it's like a very niche type of accounting for manufacturing companies. That's something we have in common. But I do also love to look at spreadsheet as well. That's my hobby.
Jason, we need to probably talk about finding you a new hobby. For sure.
You have been doing this for quite a while with the business. What are some of the trends you're seeing inside the e-commerce landscape over the last decade?
We started Seller Accountant in 2018, right at the beginning of 2018. And that was, if you guys remember, those of you guys who have been selling maybe on a Shopify site or through Amazon, that was really the heyday, baby. It was like, oh, wow, everything's growing so quickly. And it's, in a weird way, the pandemic helped us because it created a lot of additional momentum toward buying stuff online.
Yeah.
And listen, for anyone who hasn't been living under a rock, Jason, the last 2 years have been a little harder, right? The interest rates are way up. Literally the sessions on some keywords on Amazon, I'm thinking about that in particular, have just been down. And so, whether we like it or not, whether we love spreadsheets or want to read the Wall Street Journal, we have to pay attention to some of these macro trends like inflation, like economic growth, like unemployment, like interest rates, because I don't know about you, Jason, but sometimes I think as an entrepreneur, like I'm a superhero if things go really well, but I'm also like a complete idiot if things go wrong. And sometimes we're just lucky to be in a good market. Maybe we're not as much of a superhero as we thought. And then 6 months later, we're in a garbage market and maybe we're not as much of an idiot as we thought. We're just having to figure out how to navigate the current environment.
I agree. I usually use the term entrepreneur roller coaster. You're always on the roller coaster. It's like, oh, one day I'm rich, then, I'm going to go bankrupt. It's like typical entrepreneur roller coaster. We need to adjust. And since you mentioned about the interest rate, I think Fed just cut the interest rate by half a point too, right?
They did, yeah. So we got 50 basis points relief. I don't know when you'll post this podcast, but very recently, we just got our first interest rate decrease. I think it was 4.5 years or something like that, Jason. So let's talk about toy manufacturers or sellers in general. What impact does this have on me? Well, it makes it a little bit easier, Jason, to borrow money. It's going to, I think, over the next few months. And it makes it a little bit less expensive to try something new. So you guys got to think about it this way. Like every kind of minute increase in interest rate means that every experiment I run has higher stakes. So if I have a really low interest rate environment, I can take lots of risk and try new things. And if they fail, man, I can just borrow more money. But when the interest rate environment is really tough, like it has been these last 2 years, I have to very carefully pick my battles. I'm not going to launch 5 new toys. I'm going to launch 2. I'm not going to go into 5 different countries. I'm going to go into 1. And
Yeah.
I think what we'll see here, Jason, is as rates come down, it'll be slow. People can start opening up the throttle just a little bit. But here's a quick warning. You guys, if you're still in business right now, because guess what? Some of our clients didn't make it through this tough last couple of years. But if you're still in business, it means that you worked really hard to manage your interest expense and your loans and your cash. You worked really hard. My encouragement is to don't stop doing that. Now that we've had this lesson of a little bit of a lull, let's keep running our businesses by the numbers. Let's keep an eye on our cash flow so that we can actually make money through this next 2 years instead of being stressed out.
That actually is a perfect segue to the next question I want to ask. Is since you have been working with so many different e-commerce based businesses, not just within the toy industry, but all across the different vertical, what are some of your advice when you are advising other brands about managing cash flow, which is one of the hardest part when you're running an e-commerce brand, because there's a lot of money going in and out when you're buying inventory, paying for your containers, etc. Do you have any advice?
Yes, I do have advice. It's in fact, I would say like cash flow is the thing. I had a friend of mine say this last year, and it's been so true. The consequences of running out of inventory suck, but the consequences of running out of cash equals death. And so we're going to fall off. It becomes a ditch. I really hate cliffs. And when it comes to managing cash, what we learned over the last 18 to 24 months, Jason, is that has to be a priority for every single CEO, every finance team, every operator out there. And so let me give you a couple of practical nuggets on how I would view maybe managing cash. The first things first, guys, you got to have real bookkeeping. You have to have real accounting so that you can understand your cash cycle and which parts of your business generate money and which parts of your business take money. The first step is to just make sure you have decent books. Step 2 is that you got to build some kind of, even if it's rudimentary, build some kind of a cash plan or cash forecast. This literally could be as simple. If you don't want to do a long-term plan, get a spreadsheet and every column is the next week 1, week 2.
Oh, that's the one I have. Yes.
We're back to Jason's hobby here of spreadsheets, right?
Yeah.
But guys, literally just put like up at the top, cash balance. And here's the expected smiley face news. All of my deposits coming from Amazon or Shopify or PayPal or wholesale accounts. And below that, all my sad news. Here's my credit card bill. Here's my payroll. Here's my PO that I have to pay my supplier in China. And so my expected ending cash is just a quick math problem. And then guess what? That ending cash becomes the starting cash of the next column. It's
The next column.
don't go out 100 weeks, but go out like 5 to 6 weeks so that you don't have the thing that I've had before. I don't know if you've ever experienced this, Jason, but every entrepreneur has the moment in the fetal position at 2:00 in the morning where they're like, oh Lord, I just need to make that one wire go through tomorrow. Please bring me cash.
I'm trying to make payroll. Yes.
I'm just trying to survive tomorrow. And so if you
I
just
can
put
make
out this little, guess what? American Express tells you 4 weeks in advance what's going to come out of your account for that payment.
Yeah.
You know what that PO is going to be next Friday. Go ahead and put it in a plan if you're going to run out of cash today instead of waiting till the day of.
And something has been talked about, not just in the e-commerce space, but just overall business in general, the concept of profit first. I don't know if you also teach your client about this concept, and if we can also educate for those of you listener that doesn't even know what that means. Can you talk a little bit
So,
about
Profit
that?
First, there's a guy, his name's Mike Michalowicz, wrote a great book called Profit First. He wrote it about a decade ago, but it's so easy. It's almost like the old envelope system. I don't know if you remember when you were like 21 and you didn't know how to budget money yet. And your mom was like, hey, put your eat out money in a envelope. And then when that envelope's empty, don't spend any more money, like that kind of thing. This is a little bit more sophisticated for businesses, for e-commerce businesses in particular. one of the most helpful things that you can do, a gift that you can give yourself, is to have a separate checking account for inventory. And every month, put a little bit of money aside so that you, instead of having to get a loan next month, wow, I have accumulated some cash. I can just buy my inventory with cash. And then the second one that I would encourage you to have, even if you don't do like a full profit first with 7 accounts or whatever, even if I was going to give you advice, it would be at least have an inventory account and at least have a tax account. I met with a CFO client last week who's having a great year. He's going to make almost $1 million in profit this year. Buddy, he needs to make sure he's got that 350 to 400K in the account. Uncle Sam doesn't come get it next year. For what it's worth, I think that's a good way to make sure you don't run accurate.
I see. And I think the concept is you also have a account for OPEX, like a holding account. Then you allocate the money from your OPEX account, and whatever is still remain there is your OPEX, pretty much.
It's a great book, by the way. If you haven't ever read the book, I feel like it's one of those must-read books, even if you only implement little bits and pieces of it. Mike Michalowicz, Profit First, no brainer. Actually, one of my peers, one of the bookkeeping firm owners in America here, I think her name's Cindy, wrote a Profit First version just for e-commerce, and it really goes into.
I read that book too.
She's fantastic. She's a lovely lady. I know her and her husband well. They run a good business there. We're like friendly competitors, but like she did a great job of taking Michalowicz's words and applying it to an Amazon business, to Shopify. So I would highly recommend her.
Yeah, because because the inventory component is the most different compared to other businesses, because the inventory is so key, just like you mentioned. So we definitely need to have money set aside. Sometimes I'm guilty of that myself. Not having enough money set aside for repurposing inventory. And since we are on the topic of inventory and profitability, how should a brand balance maximizing profitability while also try to stay competitive, especially during periods of economy uncertainty that we're facing?
Yeah, because there's always a little bit of a tension, right? You're describing a natural tension. Anybody who's owned their own business feels this, where if I want to grow or if I want to be able to compete if my competitors are lowering prices, sometimes I feel like I have to compromise and like sacrifice profit to like keep the volume up. And I think my advice to you is that's okay. That's a normal part of business. If I'm in a category, let's say I'm in the toy category on Amazon and one of my competitors sells a similar game or a similar toy, and they're coming in hot on a particular keyword, or they're lowering their price a little bit. I have to make a strategic choice to say, I'm going to have to lower my profit margin a little bit to keep up with this competitor. Is that a good plan or not a good plan? And my encouragement to you, and by the way, this is why I love working with you so much, Jason, is that this is a lot of your expertise in terms of understanding that strategy. My point is, don't do this on accident. Make sure that you're actually having a board meeting kind of discussion with your team to say, hey, all right, our target profitability is 25% after advertising, after Amazon fees. This is going to put us down to 20% for 3 months. Are we okay with that sacrifice? We believe the ROI is going to be, we get to maintain number 1 position with this keyword or number 2 position with this keyword. I think if you just have this blanket, because guess what, guys? Let me be honest with you. Marketing teams need accountability. A lot of times we have a good marketing team and they don't know anything other than spend more money on advertising. Sometimes they need permission to spend more for a specific strategic reason, but it just needs to be intentional, because the answer, it depends. It depends. If I'm about to run out of inventory, I should not blow through inventory. I got to keep my price.
100%. You also need to make sure you don't lower the price and sold out. That's actually a very bad move. So the other thing I also want to talk about, because you do the financial planning, but one thing I noticed when I'm talking to client, a lot of the clients have a P&L or profit and loss statement, but they don't have a balance sheet for whatever reason. That's like very common in the e-commerce space for one reason or the other. What will you say to the people that doesn't have a balance sheet right now?
I think one of the most common things, and by the way, this is not a bad thing. If you're just starting out, you've just launched your brand, you're keeping your expenses down. Maybe you're not an accountant whose hobby is to play in spreadsheets like Jason. The most important thing you can do, if you're like, I'm saying like less than 10K a month of revenue, is I have to know what my unit profitability is on, like, I'm just using Amazon as an example. So I'm going to go buy a tool, Helium 10 or Seller Board or whatever my favorite tool is. And I'm probably going to choose to use that tool almost like a P&L, right? Because it has my sales, it has my refunds. But guys, once I reach a certain volume, and for me, this has always been maybe 25K a month in revenue, somewhere around that point,
Mhm.
I can't get away with just using a dashboard to run my business anymore. I actually have to have an accounting system. The reason this is so
Yeah.
important is sometimes those dashboards will lie to you, man, and they're not trying to. But
Yeah.
sometimes there are more refunds than they capture, or the impact of sales tags if they're going through the wrong data source on Amazon. At the end of the day, a balance sheet is a list of everything I own and everything I owe. I'm the CFO for 9 figures a year of e-commerce sales, and I never believe a P&L until I look at a balance sheet first, because guess what? It's something looks where I'll give you a concrete example. I was helping a client a couple months ago, and I looked at their P&L I made a mistake. I went to the profit and loss statement first, and I'm like, wow, I've had an amazing year. This is incredible. I've never seen margins like this before.
Yeah.
And then I go and I peek at the balance sheet, and I think it was some outrageous account was like negative $500,000 on their balance sheet. Just made no
Huh.
sense. Couldn't
Yeah.
make any sense at all. And our team
Okay.
was, oh, we've been
Cool.
misclassifying things in the wrong
On
spot.
the wrong spot.
Can't
Yeah.
trust the P&L. And so
Yeah.
for what it's worth, guys, don't be intimidated. If you go, by the way, the Seller Accountant YouTube page, we have lots of free content on how to read a balance sheet for an Amazon seller. This
Mhm.
does not need to intimidate you. Learn the basics, and it'll make you much more successful at managing your business.
Yeah, and since now we are nerd out about finance and financial statement, then another thing I want to talk about, this is a little bit more technical for the listener that doesn't have a finance background. What is your opinion as far as using accrual-based accounting versus cash-based accounting when it comes to e-commerce financing? Currently, my business that we do use accrual-based, and I advise all my clients to use accrual-based so you have a more accurate picture of what is really going on month to month instead of having a huge dip when you pay a $5,000 for an incoming container, for
Right.
example. But what is your take on it?
Yeah, I agree with you completely. So, guys, if this is new to you and you're like, oh my God, these two nerds are talking about accounting, just know this. Cash basis accounting, it hits your financial statements like your P&L when you stroke the check. If the wire goes to China to pay for my inventory on that day, that's when I expense it. If I'm doing cash basis, if I'm doing accrual basis, I'm going to wait. I'm going to put that when I spend money to buy my inventory, it's going to go into a warehouse, an inventory warehouse where I get to sit on that value until next month when I actually sell the units, and then I expense it. And the reason this is so important, Jason, is e-commerce has a really long cash cycle. What I mean by that is I might buy inventory today, like pay cash, and it might be 3 months before the inventory even arrives in the States. And then I need another month before I sell through it. In other words, the only way I can actually compare sales with the expenses it took me to make those sales is to do what's called accrual accounting, which matches things in the same month. Guys, I know we may talk about exits here in a minute, but I helped my clients through a ton of monster exits over the last 5 years. 0 of those exits happened with cash basis accounting. 100% of this we were involved with had solid accrual basis accounting. Really important.
Yeah, and I think that sometimes some of the e-commerce business I talked to, they didn't do a very good job on doing the accrual correctly as well, like allocating, which is tricky sometimes because, okay, you have a container with 10 different products in it. How do you allocate it to per unit correctly as part of your cost of goods sold in your inventory?
One of the most important things there, and again, guys, this is way down the nerd hole here, but if you're trying to say, how much did it cost me to buy this unit? And I might be tempted to try to load a little bit of a duty or a tariff and a little bit of the inbound freight. The most important thing is to be consistent. If I'm going to load my freight forwarding cost into my cost of goods sold, I need to have my accounting team do that every single time so that my apples to apples is similar. There are lots of correct ways to do that, Jason. And to be honest with you, we have clients that try to do accrual accounting, but still go ahead and expense like inbound freight charges right away. Like it's okay to do things because guess what? We're like juggling. Let's say we don't have a great inventory management software. Like we haven't spent a ton of money to spin up like a Finale or a Dearson 7 or something. That's us. It's a real pain in the rear to load a lot of these ancillary expenses in. And so we might make the business decision to be like, most important ones are factory invoice and freight forwarder. Everything else, I'm just going to expense. I'm not going to worry about. And as long as I'm consistent with that, I don't get into too much trouble. Yeah.
I see. I want to kind of transition to exiting because e-commerce, a lot of over the years, exiting the landscape also has been very different as we see all the giant aggregator went out of business. So there's a lot of like aggregator a couple of years ago. I think during COVID, there's like a huge boom of aggregator buying up brand like crazy. What have you seen in your line of work over, especially in 2024 and going into 2025? As far as what kind of trend are you seeing? How much people are usually getting as a multiple when they are considering? And what is the thing the business owner should even think about? Should I have maybe $1 million in the annual gross revenue first before I even entertain on the idea of exiting? Or what is some of the benchmark or threshold that you guys?
So you asked a couple questions there, and they're really good ones. I think another one of those macroeconomic things that for those of us who are in the e-commerce space it really matters to us is we saw a ton. In fact, the ton was about $15 billion flood into this space to buy businesses like yours.
Yeah.
And to your point, Jason, a lot of those aggregators, which is just a private equity backed company that buys a lot of brands, a lot of those guys did not do very well. And they thought they
Yeah.
were a lot smarter than you are, friends listening to this podcast. And they come to realize they actually weren't as smart as they were. And so that's the macroeconomic trend. So multiples were outrageous. If you were lucky enough to sell your business in Q1 of 2021, you might have been getting 5, 6, 7, 8x multiple, which what that means is your annual profit times 8 is what your business would be valued at. That would be an unprecedented high rate in this industry when it's probably been like 2.5 to 3x.
Yeah.
So we saw things go way down into the toilet in 2022, 2023, because interest rates were high. Everyone was scared. No one was investing. And we saw a lot of deals getting done at more like a 1.5 to 2x, right? And so what's encouraging, and to your point about 2025, Jason, we're already seeing multiples start to creep back up. Interest rates going down is great news if we choose to sell our business because it allows our investors to have access to cash more easily. Like right now, your standard rich guy, somebody has a family office. If he can get 5% guaranteed interest just in a savings account, he's not going to be very excited about taking a risk on your business or my business. But as soon as the interest rates start dropping, his risk profile is going to change. He's going to want to come fund an inventory-based business to try to get some upside in the market. So that's the first thing I would say is it's going to be a lot more interesting to try to sell your business. My forecast is probably middle of 2025. Not going to be 8x multiples like we saw 3 years ago, but probably more in the 3.5, 4x, which is going to be a great. So you got to be ready for when because you and I don't know. We can't time the market. We don't know when it's going to be rosy. What we can do is we can choose to be ready for whenever it is rosy.
So that's a perfect transition to my next question. How do you get ready for exiting strategy?
So there's a couple of things. Let's say, Jason, you and I are talking. We're buddies. We're hanging out. And I say, Jason, I think I want to sell my business some. And so Jason, being a good friend of mine, is going to ask me some questions. The first question he's going to ask me is, Tyler, what is your number? What is the value that you need to glean to make this particular investment a successful investment? So you asked this question a minute ago in the midst of your other questions, which is, do you have to have $1 million of revenue? Do you have to have $1 million of profit? And the answer is it really depends on what your objective is. So guys, I've now sold 2 businesses and someday I'll sell a 3rd business, right? And so my question the answer to this question for me has changed. The first time I ever sold a business, 100% of my net worth was tied up in that business. I got nothing else. It was my entire universe was this baby. And I needed to try to sell it earlier because my risk profile was really high. For my second business sale, okay, Emily and I had a little bit of capital. We were a little bit healthier financially. I could afford to wait and let that business mature and maybe get a slightly higher number for it. And maybe with my 3rd business, it'll be even more so. And so this is a very personal question, but let me give you a quick case study. I had a friend, a really good friend of mine. His name's Todd. And Todd, actually, I walked him through this process. He knew his number was like 3.5 million of what he wanted for the business. And during the feeding frenzy of the aggregators, one of them reached out and offered him that number, feeling some FOMO, Jason. And he didn't listen to his number. And he said, no, let me go keep shopping. And guess what? That was right when the market started turning back. And he still exited, but it wasn't at his number. So my advice to everyone out there is take some time. This is probably a personal, get alone with a journal, get alone with your spouse, like maybe a prayerful. This is an important decision that what is my objective? Split. If somebody comes and gives me my number, I'm to get out, baby. And by the way, the number can change. Let's say I have a couple of great years and like maybe my new target number is 5 million instead of 3 million. But know your number in advance. You asked me for some of the things you can do. There's a couple more checklists. So you know you might want to exit one day. You got to know your number. Number
Yeah.
2 is you've got to get your books in order. I realize that I own a bookkeeping company, but friends, this is so important. We saw $85 million businesses not get through due diligence because they had not done the little things to do their accounting
Renting.
consistently.
Yeah.
And we saw businesses get way more than they probably should have gotten because they just had good accounting. So know your numbers and get it situated. Third thing is take a little bit of time to document your processes. I know that looks such a nerd thing to do, but guys, I don't want all of your processes. I want your 20% that are most. And here's a quick hack. If you ever use assistants or VAs to do your work, literally just record a Loom video. It's free. Just record a Loom video showing your screen and saying, here's how I click here to place my PO. And here's how I did this. Just record the 5-minute Loom.
There's actually an AI that you can turn the Loom video into SOP as well.
I know, and it's interesting. I've seen some of those tools, Jason. Like
Yeah.
literally, guys, for less than $100 a month, you could
Yeah.
make bulletproof SOPs that would be easy to transfer to a new owner. Finally, what I would say is, as you get closer to exiting, do your buyer a favor and put a very sexy roadmap. Like for instance, let's say that I've launched 5 toys and they've been pretty successful. I want to have my next 5 toys envisioned out so that when I go to my potential buyer, I can say, hey, look how good we've done. Look
Yeah.
where we're headed in the future. Because guess what? The buyer needs to be a believer in the future of your business.
Yeah.
That's one.
And one thing I also want to mention, especially within the toy industry, the more patent or IP you have, that will also help with exiting multiple, in my opinion. Do you also agree, Tyler?
Yeah, it can make a huge difference. I totally agree. And one more quick point on that. A friend of mine, Joe Valley, wrote a book called The Exitpreneur. I do recommend this if you're thinking, how do I do the blocking and tackling of getting my business ready to sell? I think it's probably the best $15 you could spend on Amazon is just buying Joe Valley's book.
He
just
also
so that you
owned
can-
an agency that he help you with exiting too, right?
He does. Yeah, he's one of the founders of Quiet Light Brokerage.
Like, yes,
They-
yes. I'm
Yeah,
right.
they do a good job.
Yeah.
But even if he didn't use his brokerage, you may choose to. They're great guys. I think they do a wonderful job. His book is just gold because he's walked through hundreds and hundreds of these deals with e-commerce brands. And in particular, he's seen all the things that kill deals, all the things that make it less likely you're going to get paid.
Yeah,
He's able to go into a lot more detail than you and I can on this little podcast.
of course. And thank you again for being on the podcast and sharing all your experiences. But one of the questions I'd like to ask to wrap things up is, if you have to just share one piece of advice to someone that's new and getting started in the toy industry as an e-commerce entrepreneur, what would you tell them?
I think my general advice right now for online product sellers is, first of all, make sure you do something you're passionate about. I love solving problems that matter to me. Jason, that's what I've always loved about your story, the products that you developed to address the need that was so meaningful to your family. That's because it's a passion project. You care. You're going to grind through the hard stuff if you care
Right.
about the problem. The second thing is, guys, if all things are equal, I love higher value products. If I could somehow get my retail price above $30, above $40, above $50, I have the power to absorb a much higher level of fees, a much higher level of logistics. I don't really want to start my business by selling like a $3.99, a $3.
Yeah.
So I think all things being equal, if I could find honestly, even better, if I could find an $80 toy, find something that would generate enough value that there's $80, and I would really work hard to develop relationships with my suppliers once I've tested it. Guys, I can't tell you how important this is. Like your ability to dust off your passport, fly to wherever your supplier is, develop a meaningful relationship can give you a competitive advantage. But for people that are starting, I would maybe start with those 2 things. What's something I care about? What's something that really hats me off? When my kid broke this toy, it really pissed me off. Let's make that toy better. And then the second thing is just making sure that you have higher value products where you can test.
Thank you so much for those advice. So where can the listener audience find you online?
Yeah, so selleraccountant.com, bookkeeping, CFO, get your stuff in order, get ready to sell. Seller Accountant has a wonderful YouTube page. Return on Podcast is our little show. And then me, Tyler Jefcoat, I post a lot on LinkedIn. We have some content on X and Facebook as well. I do lead a mastermind for 7 and 8 figure e-commerce brands called the Seller Roundtable. So again, the nice thing about having a weird last name like Jefcoat with one F is that if you Google me, you can find my bald self somewhere.
Okay, but thank you so much for being on the podcast. For the listeners, thank you again for tuning in to this episode of Toy Business Unboxed podcast. We hope you enjoy the conversation and find it insightful and inspiring. If you like what you have heard, be sure to subscribe to our podcast on your favorite platform so you never miss an episode. We really appreciate your support and would love it if you can leave us a review and share the podcast with your friends and colleagues. For more resource tips and the latest update within the toys and gaming industry, visit our website at toy-launch.com. Join the conversation and connect with us on social media using hashtag Toy Business Unboxed. We'd love to hear your feedback and suggestions for the future episode. Until next time, keep innovating, keep creating, keep bringing joy to toys. This is Jason Shea signing off on Toy Business Unboxed podcast. I'll see you in the next episode.